And the next factor that I looked at was political environment that's surrounding this entire case, what's going on between China and the United States. The Chinese Security Exchange Committee has really cracked down on Luckin Coffee and on this kind of behavior because right now what's at risk is all the Chinese companies that are being listed in the US. All their reputation are being questioned, and it's very possible if this case isn't dealt properly, access to capital will just completely cease for Chinese companies here in the US. So the Chinese Security Exchange Committee has basically taken over the investigation in Luckin Coffee. They've raided their office, they went in there, they basically took control of their cash account, and they're actively cooperating with the SEC in the hope to actually regain some of the American investor confidence. But really read this as Luckin Coffee cooperating with the Security Exchange. I think Luckin Coffee is already a foregone conclusion. It's right now at this point is really about interest of all the other companies that are here, which are hundreds of them, at least over 200 of them, all much larger and much more well known as far as their business presence. And I think on the other side, the SEC holds a very similar viewpoint, even though it's for a different motivation. Because the SEC now wants to make Luckin Coffee an example to make sure that everybody else that's listed here is also playing by the rules. If they allow Luckin Coffee to, after such obvious scandal, because that 89-page report is out there in the public and everybody can read about it, and if they don't do a very thorough investigation, punish all the parties that are related, then they are setting an example for the next person to follow suit, because cost of committing a crime is too low. That is basically encouraging other people to do the same. There's a lot of friction between China and the United States, the trade war that's happening between the country. The American people at this point have a very negative sentiment towards the Chinese government, towards any kind of Chinese business entity. By doing so, basically, the SEC is in line with the American people's wish. And the other one that I look at is very obviously past cases, and a lot of times when you decide what to do in a certain situation, you always look at how similar cases in the past have been handled. So when we look at 20 years ago, what happened to Enron, even though you might believe it's a different scale, actually what Enron did was they falsified their sales numbers by $1 billion. At the time, Enron's market cap was about $70 billion. Luckin Coffee at its peak, when it was trading at $50 a share, its market cap was about Enron at $70 billion. They fudged the number by $1 billion. That's 1.5% of the market cap. And we all know what happened to Enron. Enron at their peak, they were trading around $90 a share. After the scandal, their price dropped to 26 cents. They declared for bankruptcy and restructuring, and eventually started paying back. A lot of their senior executives went into jail, and they basically continued to pay their fines 10 years after this happened. So well into, I think, 2011. So a very similar scenario could happen to Luckin Coffee's executives if they found involved. And given what's going on, it's very hard for the CFO and the CEO to actually get out the hook. And I believe, and if the marketing numbers were actually pumped, I think the CMO, it's very hard for him not to know about it. And usually it's a lot of times, everybody at the top are involved, because the only person who doesn't kind of hold any financial interest in the company was the CEO. I mean, he was just the employee. He has no ownership, and what's his incentive for doing something of this magnitude? The last one is the actual fallout. Like I said earlier, we already know that they received their secondary funding with fake financials, so at least they had to pay back the $865 million. There were also a lot of litigations against the senior management, and even though they might not go to trial, but they're very likely to be settled outside of court, because if you look at how much cash that's in their account, around $1 billion, they probably spent more at this point. It's probably well under that. Now they have no access to additional capital. Out of that, they would probably have to pay $865 million to the investors back in January. The rest of it, they would have to pay for the litigations, the class action lawsuits, and at the same time, the SEC is going to slap them with a very, very heavy fine. I just don't think they have enough cash to actually continue to operate their business and at the same time meet up with all the all these payments. At the end, I want to just kind of go over a summary of everything that I talked about and what I believe are the three likely scenarios that will happen. The first one, they will get delisted and go to OTC counter, or they will be taken private. I think there's about 10 to 20% chance of that happening, because I don't think it's very likely for anybody to actually purchase a company, because one, the company's reputation is very tarnished, and two, what are they really purchasing with the company? What does Luckin Coffee actually have? They don't have their CTO anymore. They don't have any senior management, so you are not really paying talents. So what are you buying? Are you buying assets? Well, they have no assets that's really worth anything, because they don't really own anything. A lot of their machines are probably leased. They don't own any of the properties. They don't own any land. Really, what are you buying? Are you buying a brand? Are you buying a product? I mean, they don't have there is no product differentiation. The product is not unique. They're just selling something cheap, and it's not a proven business model. So for anyone, I don't know what they would be paying. If you were to buy the company, basically you are faced with a lot of litigations, a lot of risk. How do you assume the potential risk when you figure out the price? It could be negative. Delist and go bankrupt, I believe this is the most likely scenario, because I think for everyone that's involved, there is a incentive to actually delist. If you look at from the Chinese government side, if they delist this company, that means they're really taking it seriously, and that may change the image of other companies that are being traded on the US exchange. For the SEC, held their standard, and they've done what the American people want, which is protect their pension plan, protect their 401k, and protect their interest. The company itself, like I said earlier, a lot of the senior executives in the company, they no longer hold ownership interest in this company. So why would they want to be listed in the US again when they can kind of restructure and just go under the radar and maybe salvage some of the business that's still viable, and figure out a way to pay all the litigations, and maybe the business can eventually survive. And the most unlikely scenario that I believe will happen is the stock continue to trade. I think one is very unlikely for the SEC to allow someone, especially given it's such a high-profile case, a lot of people are looking at it, to continue to trade. What kind of signals are they sending by allowing that to happen? And two, I really don't think the company wants to continue to trade on the exchange. I mean, what's the point of them doing? By trading on the exchange, that means you are going to be constantly scrutinized by the regulators, by the investors here, and you are not going to be able to offer another round of offering anytime soon at any price that you feel like is reasonable. You know that the business is not really a viable model, so it's impossible for you to get funding. It's impossible for you to make a profit, at least in the short term. What's the reason for staying on the exchange and face all these tight regulations and tight supervision while paying a very high fee to pay auditors? You have to comply with all the different regulations, and being listed, you have to pay a fee. So what's the point of doing that? And you know that you've already lost all confidence from the investors here, and you will not be able to access additional capital. So I don't think people in the company are incentivized to do it. Given everything that I've talked about here, I know it's a very long. I'm not very used to doing things like this, but hopefully I have explained my rationale. I hope if you're an owner of the stock, you currently carry some shares, and you believe I'm wrong, I welcome you to comment below and we can start a discussion. I feel like this is going to be a very healthy debate. Given everything that I've looked at, this is the conclusion that I came out to, and basically I already put my money where my mouth is. by exercising our shares, and we'll see what happens.